What's up? Hope everybody's doing well. Today is June 13th, 2023. And we got CPI coming up probably here in a second. Now, with the month of June, I'm obviously going to mention just one thing really quick. I'm celebrating Juneteenth. That's coming up. Uh, you know, Something I take serious now with just how things have gone through the years of my life, recognizing the time to celebrate the month of June. With that being said, welcome, and we have some more information for y'all today. My man Wade, what's good? Oh, okay, cool, bro. Yeah, man, I really value that stream. I did a lot of kind of just reminiscing on my time as an early investor and the things that I went through, the things that I've seen from early and young investors, and just kind of corroborated a framework that allows people to not only advance their knowledge, but create systems in place to ensure their viability for longevity as a investor, not just only within crypto, but just in overall markets. But yeah, no, I appreciate you commenting that because a lot of effort went into that stream. So good. I'm glad you got some value from it. Definitely hit me up on Telegram, man. There's a lot of great things that I don't put on YouTube that we can definitely talk about. Your consistency shows uh, the worthiness of us having that conversation. But with that being said, let's get into it. We got a lot of good stuff to look at, man. We're gonna look at many different angles, not only just within crypto, but just to how to really just feel our raft going back and forth. Do you feel it? Whether it is just, I would say, listening to other people out there on the street who may be inquiring. I'm starting to field inquiries about people getting interested in markets pick up slightly, not within crypto though, but specifically more so towards equities. I got a few people that have been asking me more about, hey, I want to buy some real estate. Is now a good time? Those questions are starting to float around. And then so typically this is an interesting dichotomy because this is around the time where crypto will be last with these conversations per se. But this is also the time where we know, the time to dollar cost average is still afloat, but I would say the time to be going crazy heavy will not be here for too much longer. Like there's some things lining up for the rest of this year as we go into 2024. Some interesting things will start to occur. And so the question is, are you well before it? And so we still have an opportunity here within crypto land. Definitely going to look at Hex. We'll look at Pulse and PulseX and just some other things, especially within equities that I want to kind of correlate with you guys and just get you guys on the right track of thinking in terms of how all of this unwinds as we move forward. So, with that being said, appreciate y'all and everybody on the replay gang who is going ahead and watch this later on. But we're early in the morning, so let's get it. So, let's start off with the main topic here. We have inflation CPI data coming out today. Now, this is going to be a great opportunity for us to really see if the Fed is going to somewhat stick to what they've always said was when they see a material downturn in inflation, they can pause, right? And I would venture to say us getting down to 4%. We've cut inflation by more than half. We got up to 9.1%. I believe that was last year. And so we've been able to make significant progress. And these are words that Fed Powell always uses. Hey, if we can make significant progress, we don't need to be going up on these interest rates. But, they are just stalling for time because they need certain things to happen under certain time frames. And so that's all it is, guys. All this, none of this stuff is really so much on just the data. We've got to understand that there is political things here at stake. And so, with that being said, stalling for time is part of the game plan. But if we take a tighter look here, no thanks to the cookies, we're good. Take a tighter look here. And now what are we, looking to see? So this is the Cleveland Fed. They have what we call a nowcast, inflation nowcast. And so they're letting us know up to date data. And this is, part of the Federal Reserve, right? A branch that is a part of the whole scheme of letting us know the data. Now, nowcast is different than what we get from Federal Chair Powell because he gives us information from the previous month. And so what we're going to receive here in June, we're going to receive information from the previous month, which is May. And, it is what it is, right? So we are already at, I believe, 4.9% was the reading for the month prior to May. Let's be accurate with that. So let's put current CPI rates. Let's make sure we got that correct. Yeah, so we're at 4.9%. So like I said, we've basically cut, CPI in half, over the past, 6 to 8 months. Now, this one will break us past the 50% mark if we go below, 4.5, 4.3. Now, so the expectation is to be about 4.1%. And so if we kind of come here, and the nowcast is reading, just that, 4.13 for the month of May. And that's what we will get the information on. And that's for CPI. Now, core is seemingly a little bit more sticky, but thus also coming downwards. And the real thing that, we've all got to kind of wrap our heads around is even the Federal Reserve, a part of the Federal Reserve for the nowcast is saying the month of June, we have 3.2% inflation annually, right? Year over year basis. So this is getting us very close to that target of what they've talked about us being 2%. And so this is a positive development because now if we can get these federal, if we can get these Fed funds rates to say, hey, we'll stay right here. We're not going to 6%, stay in the fives, call it at, 5.25. And we just stay here. But what does that mean for markets? This is a jubilee moment. Capital can rotate because there is a more predictable future, I'd say, in terms of possibilities. It gives tone. It gives a lot of things off to movements within markets. And so we'll see because this inflation reading coming up is going to really, really help us, kind of get a good material understanding of the likelihood of a pause. And so, we can go ahead and do the Fed Watch tool. So we'll do that live really quick. Fed Watch, and we're going to go ahead and get ready for that FOMC meeting, which should be coming up. Guess what? It is coming up tomorrow. So bang, bang, 2 days in a row. It's interesting how these things happen, right? It's not a coincidence. And then so the market is saying 82% chance that we're going to stay right here. And this is as of, a little bit more than 24 hours ahead. Now, this Fed Watch tool has been very accurate. And so will it continue to stay accurate? Who knows? Maybe the Lindy effect will take effect, right? The Lindy effect is nothing but the longer that something tends to happen, the more likely it's going to happen in the future. So this has been very accurate over the past 6 to 8 months. Who knows? Will it be accurate for the next 6 to 8 months? We'll see. And so this is going to be an inflection moment if we do pause. And you guys remember how I talked about this being a 9 round, a 9 inning type bout here. This rigmarole, this back and forth. Like, I know you guys has felt the back and forth. Oh, we're taking off. No, we're not. Oh, we're taking off. No, we're not. This is all about positioning. And then so as long as you're positioning yourself on these downtrends and we get them, you are doing what you need to do as a savvy investor. And then so let's take a look. Let's dive deep into inflation just a little bit. Then we're going to segue into pulse because I really want to not lose sight of that. That's the key thing of any crypto investor who's been watching this channel. You need to stay updated on that chart. Not telling you what to do with the chart, but you need to stay updated on that chart. For me, there's a lot of action happening down here. But anyways, let's get over to Trueflation. So Trueflation is another. So this is a third party, not involved with the government. And what you are going to continue to learn is one, you can't trust the government for many things, but especially when it comes to even data. And then so we're going to go ahead and look at some true economic and financial data that we have here. And then so we're saying current 2.74%. And so this is a framework that allows us to track the timeline and time frame over the past year. But not only that, we can even categorize the different areas of what is staying sticky and what's not, truthfully, as of today's date. And so, what can we see if we kind of scroll through even housing taking a nosedive? Transportation has been flat, but utilities nosedive, healthcare nosedive, right? Household and daily items. This month we've kind of popped back up, but overall, with the grand scheme of things, nosedive. Alcohol and tobacco, that's where they're gonna get you. And that has continued to go up. So for those that are drinking alcohol and smoking tobacco, you know what? Unfortunately, you're not getting price breaks anytime soon. That's what the trend is showing us. Clothing, nosedive from October. Communications, this is where they're getting you. So your T-Mobile bill, your Verizon, all of that. Yep, they're gonna go ahead and hit you upside the head with that as well. Education, of course. When does that ever really go down? I don't even think it does. College is going to always be, more expensive because that's a Ponzi as well. We should know that by now. And then, recreation and culture, other, these are kind of back and forth. And so, with that being said, this is something keep tabs of. Bookmark it, check in. Doesn't have to be every day, maybe once a week. You should have, like, guys, one thing that I would say, being an investor, one thing that I've learned to do is use my bookmark tab and visit things constantly. That way you don't forget. That way you can stay up to date on things that actually do matter. This is one of those things. Another things that we've showed here on the channel that we're going to keep abreast on is, hey, what's going on in tech? Because as we know, tech likes to lead like the charge out of any downturn, out of any bearish sentiment, out of any, I would say, catastrophic events. Tech tends to rise out of the ashes and be on the forefront, Paul Revere type stuff. And so, what do we notice? Like here in the month of June, we have literally the least amount of layoffs in a very, very long time. This is a positive development because, hey, if tech people can get back to work, that means they can make more cool stuff. That means they can provide some more stability. This is also telling me that, hey, the balance sheets for a lot of these companies, they can actually maintain their employees more. That means they're in a stronger position. I have charts to show that. And so we'll get into those in a bit, but this is a positive development once again. And so, what do we see? We see Meta on here several times. There, we see Meta here, Meta here, Meta here. And as of now, we don't see many large companies with the mass layoffs. So this is a good thing. We want to see this thing stay low, below 10,000 each month. And this is going to get back to a normal trend of growth within the economy, within the tech sector. So that's some good stuff. And that's just in reference to economy type stuff. That's in reference to equities. We'll now move into a little bit of crypto. So let's start with the PLS chart. So Pulse, we are below the SAC rate. Just in general, just remember what this is, right? Where are we at with this in particular? Below IPO, if you're a stock person, we are below IPO pricing. The rarity for something like that is extremely rare. We have to keep things in perspective. One thing that I'm going to encourage you folks to do, and I'm going to show you when we get over to, we're going to look at the NASDAQ. We're going to look at some things within the futures market for the S&P 500. Please, just for like a month or two of your life, put your candles on Heikin-Ashi candles. So change it from just regular candles to Heikin-Ashi candles and start using just the monthly charts. Do that for like 2, 3, 6 months of your life. It will change your whole investing game because you can actually see momentum and not get flooded out, not get all crazy about any short-term price action in an overall trend that is going in your favor, especially if you bought over the last 6 to 8 months. And so this is key. But going back to the whole thesis here in talking about the golden day of May 17th, we had an opportunity. We could accumulate 32 million posts between the cost average basis, anywhere between $1,200 and $2,400. We are still below $3,000 for you or anybody out there to accumulate 32 million posts. That gets you one spot to be a validator. And this is going to be something to always consider, right? Getting yield on appreciating asset. And that yield is also appreciating at the same time. This is a multiplier effect that you cannot find in many, many different markets. But here in crypto, here for a layer one blockchain who has plenty of activity. The thing is, Richard actually had an interesting tweet that we may have to go and find. The statement is true, right? Pulse Chain is actually performing better, or Pulse X, the DEX for this, is performing better than Uniswap outside of Wrap BTC and Ethereum. And so this is a positive development, a chain that people will continue to understand more of as time goes on. As long as you're early in the queue, you'll be good. And so with that being said, we have a little bit of bearish divergence here. Price coming lower. But if we take a look at the RSI, it's being kept up just a little bit. So that's a positive thing. I'm taking a nibble. Matter of fact, I might have to take a swing here. But with that being said, the momentum, right? We want to track momentum. We have the stochastic RSI, a little bit more, I guess you can say, volatile type trend to see us, the volatile movements. But now when we kind of look at the MACD and that inflection point, we had a lot of dumpage first time around. But as you can see, it's been a little bit more tame and we have a little bit of recovery here. But overall, if we are to just go ahead and just look at checking the vertical line here, we're looking at, boom, these moving averages. These moving averages give us an opportunity to see momentum alongside with the green candles on the upside. And then so as we have less dump each time, that means, price stability and volatility also comes down. Where price stability stays higher, volatility comes down. And so now we've had a lot of volatility to the downside. What we are looking for is a continuous, and we're going to do the long-term game here, guys, the long-term play. The volatility will continue to subside to the downside, and when these moving averages go past the zero line. So we'll put the zero line here. When we can get past this zero line, boom, we can get past that zero line for these moving averages. Now we enter into, okay, now we can continue to stack upon price. Liquidity pools being small, and we can actually start to go. And so this is a process, right? This is a multi-month process. And this is a good thing that we can all experience, right? And then so getting a nice accumulation, a nice bag of an asset that will be here for a very long time, because what we're noticing is as these DEXs get more adoption, because the centralized exchanges are no longer becoming viable because people are seeing, hey, my money's not safe there. There's regulation over there. But when you use the DEX and we're dealing with things that aren't securities, there's safety. And this is what crypto has been about the whole time. But whether have you realized that, it's on you. So centralized exchanges have never been our friend. Now these DEXs, premium products, that's the key. So if you can own a premium product, it's like owning part of Amazon, owning a part of something that just works. The more people that use it, the better it goes for the investor. So we're going to continue to track the adoption on PulseX, on Pulse, but that's a good read on the MACD. And then so the longer that this has been out, we've been out just about a month here for Pulse. And the longer that this coin is out, we want to start using the daily charts. And then we can use the weekly charts. And then we're like 6 months in, then we start using monthly charts. No longer will we be using hourly charts. We'll give you a distorted view on what's going on. But even if we are to look at the daily chart now, and we have a couple things here that we can use in our favor. So let's go ahead and punch this down. For now, we'll collapse the RSI down. And so we're just looking at just Pulse just in general. One thing that, we can currently see of how you can say, hey, where am I at versus the majority of people with their experience interacting with the coin. This is another way of interpreting the volume profile. We have the point of control at a higher price of where we are currently. And from that point of control, that's where we want to measure things down. There's something about that 50% down from the point of control. So we're 30% and we got up down to about 40%. But there's something about that 30 to 50% range from the point of control that is typically a nice little sweet spot. And so, with that being said, we may see some people start to interact at these lower levels and see the value of these people basically dropping their bags. And that's just part of the game. You get out of position, you are the investor that clicks the buttons. And so, no, this is one of the things that we're going to continue to watch as we kind of dip below sack rate. That's a positive development for people who are looking to accumulate this asset. And so, as we kind of come through, like we talked about, less than $3,000 gets you 32 million posts. For that 32 million posts, what can you do with it? And that's the part about having Pulse that also gives you opportunity and why there's value in the product as well, because you can actually do something with this 32 million. You can go get hardware, become a validator to now receive. What will you receive? Boom. You can receive an APR. And then so this is basically saying, hey, you are securing the network, being a validator, and you can get a yield for that. Now, that's something worth thinking about, not only to do, but also understanding why is that significant. That's the whole key. Why is that even significant? Right? Because the thing is, like we talked about, where can you find a yield of 23% on an appreciating asset? There's dividend stocks that may give you 4, 5%. And through time, yeah, they may appreciate maybe like on average 6 to 8% a year. But where can you get something that can basically appreciate not just 8 to 10%, but hundreds of percent annualized per year? Because like we talked about, we're going to start looking at the monthly chart and then hopefully the annual chart as the years go on, but give you a yield of 23%. Now that yield may drop, but it's not going to drop considerably, because the key thing is the higher the price goes for Pulse, the less, how can we say, you cannot acquire this amount of Pulse for a reasonable amount of price for the average person for much longer. Because once Pulse does a double and a triple and a 5X and a 10X, you got to think about it. How many people for 10X from now, how many people? So let's go back to the chart. How many people are going to have $30,000 just laying around to get one validator? And as we know, 5X's and 10X's, all we got to do is go up basically 900%. That'll give us a 10X from price now. So these type of movements happen all the time in crypto. We had a movement just like this, and this happened within a week for launch. So you're telling me we have years from now, let's say within a year's time frame, that a move like this isn't in the queue? Well, it's going to depend on what's going to happen with Bitcoin, because if Bitcoin can get a move of 100% gain, you're going to see things like Pulse and PulseX have an amplifier of 5X what Bitcoin does, potentially even 10X. And so this is what's on the table. And so being a validator is no longer going to be so doable. So you may want to think about stacking up potentially on the opportunity if you understand what's going on. But if you don't, continue to learn. It's on you. And so that's where we're in this for, right? That's what I've been in this for this whole time. And so we have that opportunity to keep stacking validators. And so we've got the crypto talk out the way. Let's segue back into some market type stuff. So one thing here, like I talked about, and some things that I will kind of line up for us all here, is talking about equities in a sense of how we could use equities to parallel the movement of crypto. How can we can use basically market liquidity to parallel with equities? Because the movement of capital and capital rotation has all to do with the repricing of things, and equities are a part of those things. The more money that gets created, the more that it finds itself in assets. So these are just natural, easy to understand, not even phenomenons, but actual realities. And so long-term view, let's throw out the monthly chart. This is what we're looking at. And so why I always encourage folks to say, hey, let's get all the riffraff out of the way. Let's go ahead and put this on the big screen for a second. Get all the riffraff out of the way. Look at what really happens if you just hold. Truthfully, this is the S&P 500. So this is a representation of the top 500 stocks within the United States. And so, yeah, there's some rough months. But if you are a generational investor, so what does that mean? This is what you should do because your money will continue to get devalued through time. So you don't have to say, hey, I'm going to put my whole life savings every single year into investing. But if you just do a little bit each month for the rest of your life, you will set yourself up to beat inflation. But then you want to choose the assets that outpace inflation on a large time basis. So not just for a year, like a year, but consistently for 10 years, 20 years, but then also at a large percentage basis. There's only a couple things that do that, y'all. I don't know if y'all realize that. It's not necessarily the S&P 500, but the NASDAQ is one, XOK, which is specifically the tech sector in the NASDAQ, and crypto. That's it. Nothing else outpaces inflation. Wages don't outpace inflation, but the S&P 500 gives us just a general idea of what the average investor understands. As far as like, hey, if I just buy my VOO, my Vanguard S&P 500 ETF, I'll make $1 million. But they don't realize that $1 million in 20 years is not going to be worth what they think in purchasing power. So we need amplifiers on that, which that's why we have crypto in the portfolio, or why I have crypto in the portfolio. But anyways, forget the rant. This is what happens on a long-term time basis, right? The more money that gets injected, this is what we do. These are breakdowns in the system, but this is for small periods of time, as you can see. In the grand scheme of things, I say small period of time, 2 years in the grand scheme of thing of 20 is not a big deal. But only for the people who buy tops, right? So we don't buy those because we know how not to. If you don't, go back and watch the last year of this channel. And so now as we kind of, look at the holistic view, what has the last, 8 months of the NASDAQ, the S&P 500, these larger markets, what have they done? And it's been nothing but green candles, with this month being probably one of the best months. And so as we kind of rotate back into the weekly chart, there's a couple things that we could look at. So let's go ahead and throw this back on the weekly. And we have an average, right? And then so what is an average? An average is looking at price movement and saying what is right in the middle. And this channel helps give us a good, broad basis understanding of what that is. Just kind of going back and forth, up and down, the seesaw. CPI going okay, we're good. No, more inflation. Okay, less inflation. No, FTX, all this stuff, right? Oh, all these different things. Bank failures, all of this crap. But if we go back to the monthly, all of it didn't mean anything. Over the last 6 to 8 months, on a month-to-month basis, prices are going higher. That represents exactly what happens when times are getting increasingly better. We're not going to say we're out of any type of recessionary pressures, but understand that markets are forward-looking. And that's the key. The forward-looking nature of markets, if you are positioned, even though there may be a recession, that's not what prices will always do. Economically, they may inject more liquidity, but what does that do to markets? Only push them higher. And so that's one thing to just note. And so the biggest thing is MACD here. The MACD, after a rotation of profit taking for months on end, has not only gone from dark red to light red, but we are now approaching the zero line. And we are now getting to the point where we may have opportunity to actually go positive on the MACD, on the monthly time scale for the S&P 500. And so if we just look at any time that that's happened, We'll just make a few marks just to get an idea of, okay, time periods of where that has happened. And we could just, eye it. And so we can see that has happened here. And just take a look at what happens in the year after. Here, we are approaching. Let's say we have this, and I'm looking for, not just a few months, but we're looking at like 6 months plus of at least downwards action on the monthly chart for the SP 500 here. And that happens, right? You have this much degradation, you have this much, bearish sell off, and however long it may be. It may be a year, it may be 6 months, it may be 2 years, whatever the time frame is. Just what happens when we go positive. That's what we're trying to hone in on and pay attention to. And we have this time here in early 2001, but we finally passed that zero line on the MACD here, and where we have the moving averages start to trend back up. And so, regardless of what people may say, what is happening in the market, not what recession could feel like, because feelings have nothing to do with price action. So if we put that down, collapse that. Every time that we've had this happen for the MACD on a monthly time scale over the last 20 years, so not the last 3 months or last 20 minutes, last 20 years, we have, guess what? Positive price action. So let's collapse these down so we can get a good view of that. So positive price action, right? For a reasonable amount of time. And these are a couple years after, right? Positive price action. And so, and typically, like, this yellow line is after somewhat of a material bottom. And so price movement is showing a positive tone outside of what the tone is of what people say. And that's what we have to realize as investors. And so don't get caught listening to people if you can take time to understand things on a data-driven process. That's one of the things that, an investor, if you take the time, you can do. So we come back to the weekly. And what do we see? We see us, and we can actually go back to, we can go back to regular candles just for a brief moment. Now, the two areas to watch this entire time that we went ahead and looked at a couple months ago, and so we have a major update as of this week, is the area, the price targets of about 4,300 and some change, and 3,800 and some change for the SP 500. And so, as we can see, let's go ahead and put that on the big screen. So as we can see, we've just kind of channeled up in the riffraff, channel up, but we have a material breakout. Now, with all breakouts, we cannot say, oh, yes, this is it. We're taking off until we have a support, especially on a weekly. We need to break out, use this for support, maybe for a month or two, and then we take off. But time frame wise, debt starts to roll over at the end of the year. Ding, ding, ding. We may have to do a stream on that. But time frame wise, the end of the year, let all the other crap just get out the way. Let people forget all the banking failures, and debt gets rolled over. And typically, you'll be surprised, the beginning of New Year's, people start to feel better. They like to say, oh, we're going to have an opportunity to do things differently this year. And so from a crappy year like this to a transition year like 2023, 2024 may revert back to the other option, which is number go up. We'll find out. And so one thing that we can see is this week here is pretty strong. And we can see that it's no longer just getting to a downwards or a choppy type action. We have positive growth on a consistent basis, especially over the last month. So, we may get a little pullback, and that's needed. But you see I guess you can say the biggest thing that we can really, really see is not so much of with the candle prints, but just the angle and the trajectory. These are things to pay attention to. And so it's clear to see angle and trajectory when we use a line chart. And so angle and trajectory, let's talk about that for a brief moment. Angle and trajectory, this angle and trajectory, clear to see. So let's make that yellow. Angle and trajectory, clear to see, right? We have something more sideways here. Angle and trajectory here, now changing slightly. So what does this angle and trajectory emulate? That emulates time frame and price action of a bull run. And so we'll see how long we can keep that type of angle and trajectory with price action. So something to just kind of make note of. And so that's just a look at the S&P 500. One thing that we continue to talk about, which if you guys use TradingView, I have a great resource for you as we look like we're about to approach 4,400. But a great resource that we can use for our indicator bucket list is looking at global net liquidity. Like we've had a lot of talks about global net liquidity and how they help shape and contour markets and what people do with their money. And so one thing that we can see if we pop that on briefly, it is unparalleled on how, as we can see here in orange, we have the global net liquidity. And we see that big old pop in global net liquidity, of course, from COVID. And as you can see, SP 500 tracks with it. And so what can we see? We can see no global net liquidity gets taken down. So this is central banks saying, hey, we're going to go ahead and run off the balance sheets. Private banks are not offering as many loans. There's just not enough money sloshing around in the system. And so we take off to the downward side and price will follow. And then so same thing here. We are just kind of slowly trickling up, similar to a time period, where we kind of slowly trickle up, but we're not just taking off. Boom. And then we have a period of time where we do. And so the biggest thing is after a time of not doing much, there's time of doing more. And so we have a time frame of doing the exact opposite, where markets come down. We have a time period of transition where we're not doing much. What happens after that? Same type of scenario, a time period where they do more, and that's add liquidity. And so one thing that we can do is now let's go over to the tech sector. So let's look at the NASDAQ, because the NASDAQ is going to lead a little bit more of what we are seeing on a longer time basis. And so let's go ahead and same thing, like even from 2008, the big old blow up, there's things in place now, quantitative easing, that help us with all of the worry for these watershed moments. And the NASDAQ has been refuting all the points made of all of the people who have said we're going to crap. 2023 and 2024 are doomed. They've all been wrong for the past 8 months. Will you continue to be wrong with them? I don't know. And so with that being said, we've seen a nice, very, very, very nice recovery, almost back to all-time highs for the NASDAQ tech sector. That's what we have here. So let's bring that in front. So same thing. We're looking at the long-term time basis. Same thing. The NASDAQ dang near picture perfect with the global liquidity. So we'll tap that off for a second. And as we can see, we have the Bollinger Bands here. So with the Bollinger Bands, same thing. It gets us an average here in the middle. And typically, what happens when we spend time above the average? These are good development, positive, not predicting, but these are positive developments for the NASDAQ as well. Time periods where we have come off of a low, a local low, and continue to essentially stay on top of the mid band here in the Bollinger Bands. So here, after the 2001 tech crash, here after the global financial crisis, and here recently. There's only 3 times in the last 20 years where we've even, considerably dipped with a monthly close below an average of the monthly Bollinger Band. And then so this was a time to be taking action within equities, even, especially crypto. And now we've gotten past that. And so this has been the case not only just this month, but even last month we closed above it. And then so in 17 days, we'll have another close above it. And so getting back towards this all-time high. And so, well, okay, the question may be, well, what happens when we get back to the top of the Bollinger Band? In a bullish phase, right? In a bullish phase, guess what? It comes back, it touches. It might come and deviate back down a little bit, but then you touch again and it just rides it. And it typically likes to ride it for not just a month or two, but for years. And so, the question is, well, what happens with crypto during this time? Well, let's draw a parallel and let's pull up BTC during those time periods. We'll put that on a log chart. And so while the NASDAQ is riding the top of its monthly Bollinger Band, we like to see Bitcoin go from 800 bucks to 20,000, right? That's what we see during those times. And so, this is something to look at, right? So now I think the next topic to really start to wrap our heads around here, we can take off the global liquidity for a second. So the next topic to kind of wrap our heads around is why crypto is not seemingly doing the exact same thing as the NASDAQ. Can y'all see the difference currently? Okay. And so the difference currently is the past 2 months. What's going on within crypto that does not, take shape within the NASDAQ. So those two candles there and this time period where we've got this lull falling behind. What's going on? And so this whole regulation front with the United States desperately, this is a desperate move, by the way. Gary Gensler is trying to throw every punch that he can to FUD the common folk out of crypto. But guess what? All tides rise when that global liquidity kicks back up. Crypto will not be any different than anything else within equities. And so basically what we're seeing here is, hey, the most risky thing is late to the party. But that actually gives you a less risky environment, truthfully, if you're a buyer still within crypto. Because think about it. You have equities taking off. But the thing that will appreciate more than those equities is still at a discount. That's actually a less risky position to be in if you think about it. And so, this is positive development. Now, if we come over to the NASDAQ, 100 stocks above their 200-day moving average. The 200-day moving average is a moving average that everybody looks at. Now, we've talked about this quite a few times in past streams, especially a lot when we were down here. And I'm like, yeah, if you guys are buying equities, you know what? Probably want to accumulate if we come below 20, this red line. And so you had that opportunity if you were a viewer on this channel, but also to accumulate your crypto since June of 2022, and you had the re-up in October. And now the thing is, the time periods of where we spend when 70% of the NASDAQ 100 stocks are above their 200-day moving average, same thing. We have good times for a considerable amount of time. This is the daily, even if we put the weekly chart on here. These time periods are times when the NASDAQ does extremely well. And so let's double check in the Q. Pop that on as well. And so during these periods, and so as you can see during this period here, right, NASDAQ is in a considerable uptrend. Then you have, a nice little clawback. People take those profits. This period here, uptrend, right? And we have to eclipse it and use that support. Same thing here, uptrend, same thing here during COVID. And then so we have now, as y'all can see, we have now eclipsed 70% of the NASDAQ 100 stocks above their 200-day moving average. And so this is the fun box, because typically you don't just get here and come straight back crashing down. You tend to stay here for a while. And we're just going off of the data that we have over the past, since 2008. And so, yeah, you have some times where you kind of peak up into it and then you come back down for some time. But even then, price is still going up. This is another positive development. Rotation of capital. It's the name of the game. And so one thing that we can kind of help us understand, well, hey, what is on the precipice of the chart for Bitcoin? And then so here we have the Nikkei. How do you pronounce this? Let me try that one more time. The Nikkei. And so this is essentially the equivalent to the SP 500, but for Japan. And so what I have here with the price data is one thing that we have been able to see is Bitcoin likes to track alongside the Nikkei. And if we can get this on here we go. All right. So if we can kind of see these crosshairs, when we see the Nikkei, doing what it needs to do, ripping and running, right? We see Bitcoin doing the same. And when you see it, dumping off, we see, let's do that. Okay. And so we see Bitcoin kind of relaxing. And then so one thing that we've seen that Bitcoin, because think about it, Japan, China, these are the markets that are active in crypto. The United States is not active in crypto at all right now. What do people do when they're in profit? They rotate it into other things. So the Nikkei taking off and making new highs, right? And then so especially here in 2023, they had, their time of, price relaxation in 2021, 2022, 2023, liquidity comes back, and we've had, 6 really good months. 6 really good months of price action. And then so when they're feeling good, they may go ahead and considerably think about rotating some of that into something riskier, which Bitcoin falls into that area. Bitcoin rises, Pulse and PulseX rises. Ethereum rises, ding, ding, ding. So you want to accumulate while things are still under the water, because they won't stay under the water forever. And, not advice. This is just looking at how markets move. And so as we look at the Nikkei really breaking out here. And so, you want to get the thing that is not broken out yet. That's what a savvy investor does versus trading the breakout. Like, I wouldn't be buying the Nikkei right now. I would have been looking at this before this happened and say, hey, is this a lower risk time to be buying an asset if I was interested in the Japanese market? And so the thing is, one thing I want to kind of take a look at is this correlation coefficient. So let's kind of branch that down a little bit. So this correlation coefficient down here. So the time periods where Bitcoin is highly correlated is when we see this blue line coming higher up towards 1. Time where it's lower on the correlation is down here. And so we have low correlation here, lower correlation here, and lower correlation here. And so what do we want to do is look at the time frames that we sustain that lower correlation, because this is the time where the Nikkei is going up, but Bitcoin is not. So same thing that we talked about before is the asset that is not going up with these other markets, but on a long-term time scale is still outperforming the other market. So the comparison as SP to Pulse and PulseX, same thing here. Bitcoin compared to the Nikkei. And so more explosive to the upside, but still not taken off yet. And so typically we have these time periods of where the correlation is low, where the Nikkei is taken off, but Bitcoin is not quite doing that quite yet. And so you have 397 days of that sideways before we start to see Bitcoin come in parallel to the positive price action of the Nikkei, and this is the bull run. So how do I know that the bull run is going and starting? When we see this blue line start to have the trajectory of going up. That's when we are in bull mode. Snap 3 times. Same thing here. For the transition year, these are the transition years, y'all. Transition year here in 2015, transition year here in 2019, transition year here in 2023. And then same thing here, right? You see the correlations start to come back with the Nikkei, and you see Bitcoin with these very bullish candles on the monthly time scale. And so how long was this time period here? Transition year, August of 2019. We say about 397 days as well. Very interesting. Is that a coincidence? I think not. And so we got some time, but we don't have forever, right? Before we get to the most bullish phase of the bull market, potentially July of 2024. So we're a year out. But as you can see from the bottom, we are nowhere near it during that time period. And so, with that being said, piecing some things together here, these yellow lines are the happenings. The happening happens. That's like the last hurrah. Like, hey, basically, if you're not allocated in a considerable amount, the gains that you receive just flat out will not be what you are going to hear on Twitter. What you're going to hear on Twitter in 2024 are all the people, us, who bought while Bitcoin and Ethereum were at 18K, 16K for Bitcoin. Ethereum's at $900. And we're accumulating all the things that are going to outpace Bitcoin and Ethereum on the way up. We're going to be talking about our 50X and our 100X in 2024. And so if you wait to accumulate, you are just getting in later on the queue. And so probably 50X and 100X for this next bull cycle may not be on the table for you if you are watching this in 2024. But if you're watching this now, you still got an op. You've still got an op. And so will you take advantage of the op? Hey, who knows? And so this is the positive parts of looking at, these markets that have the boom and bust, but they will always have boom and bust because market liquidity will continue to expand and contract. And that's a function of the debt system that we're in. And if you don't know how all that works, please, please, please go back. I don't know when I did it, maybe like 4 or 5 months ago, but I did a whole stream on understanding money and debt. You might have to find it. It's probably one of the first maybe 10 or 15 episodes. And so, this is kind of how we can use other markets to help us understand Bitcoin. Same thing coming back. I'm going to keep getting back to it. Even Bitcoin, Heikin-Ashi candles. Is there anything really to stress about? Do we have an extremely bearish candle even for this month as we are halfway through? It's barely printing red here, barely. But the rotation of capital is still coming off of a very, very much of a, how do you say, it's coming off of the back of a lot of dumpage of capital. And it's similar to other bear markets. And then so if you take the holistic look, let's take a look at 2019. Sure, we had a downtrend, but 1, 2, 3, 4, 5, 6 months of relaxation before bull run. So if we have that, it is what it is. I personally don't think it's going to be this pronounced to the downside. That's just my opinion, and that's the first opinion I've given on the stream. But with that being said, we have this channel here, and we'll mean revert for some time in a transition year before bullish actions take place. Same thing here. We could look at global net liquidity, crypto tracking as well. Global net liquidity looking good. Orange line starts to come down. Guess what? Crypto's coming down. And it's right within this, mundane, boring period of time, which we may have a year. Who knows? Maybe a year and a half, but same thing. Once we get past this yellow line, what does this yellow line also line up with? Because these yellow lines are halvings. What do you notice? It is the inflection on the not only just the halving with the Bitcoin block reward getting decreased for miners, but it's the inflection on an increase of liquidity. I think the halvings were strategically placed by people who understood these Fourier rotations of money movement. So you see here, big spike in liquidity. Same thing here, big spike in liquidity. And that's on a rolling Fourier basis. And so if we kind of come in at a closer look here, and we're using the same type of information, right? We're using these yellow lines. We're looking at previous highs. And as we can see, we came down to this previous high for our low, bounced right off it. And so what are we doing now? We are maintaining, right? We are maintaining the 60-week moving average. So 60-week representing the 2-month, the 250-week representing the amount of trading days within a year. And so we are just holding tight. And we, peaked below it, but what we want to see is, do we get a weekly close below it? And if we do, then the next point of where we want to see some mean reversion is to the middle of this channel, but that also lines up with the 250-week moving average here at $23,483 currently. And so this is all positive development in an upwards move. And so take these as gifts. Take these periods of time where price within crypto is not doing what the rest of the market is doing, which is going up, as a gift if you are a crypto investor. Because, this is the game. And so on the weekly Bollinger Band, same thing. No, this isn't so great for, if you're wanting things to take off as of this week, but it is great if you're still trying to accumulate, because we are breaking this midline of the Bollinger Band on the weekly for Bitcoin. And if we come back, and tap towards the bottom, and who knows, we may come back down to 21, 22. I'm thinking that this will come back and play around with the mean reversion of the average. So how we tend to go up and play around for some time. We tend to get here, play around for some time. So we went up, we'll come back down, maybe play around for some time and allow this Bollinger Band to collapse closer here. And so the pivot point, so if we look at the Heikinashis, yes, pivot point, and I think the 14-day will give us a good sober look. We're gonna, potentially have some red candles here on a 2-week basis, but that first green candle that we see may be a pivot point to take advantage of. And that's when we can start to get some, positive price action once again for crypto on a broader basis, on a 2-week basis, but also leading into a monthly basis. And so that's kind of what I'm looking for is, we'll see how many more red candles print, but as soon as we see that first green candle, okay, we've probably got, a good month or two within crypto coming up after that first green candle. So like here, and that's in crypto uptrends, right? Obviously, here, that first green candle. Here's that first green candle after COVID. Here's that first green candle. Here's that first green candle. So typically, you're going to have, a good, month or two, bare minimum. And many times in a bullish phase, that ends up being a good year. And so we'll see. So that's a lot of info. Let's take a break. Let's see what y'all got in the chat. Who we got here? We got Art. What's good, fam? Early morning alpha is what's on the plate today. Eat up, eat up. Let's see. Okay, cool, perfect. We part of the live crew. Hey, I'm feeling that. I second that. Good morning. The dip is great, but you need to be selective about what you buy. 100%. 100%. Ooh, did we get some breaking news? We did. Let's go. So we became savvy investors by being ahead of the CPI, right? So we knew what we were going up against, and we came lower, 4% flats. Cool. And we have core being exactly what we expected. So these are positive developments within markets. Ted, let's get it. BFD in the house. And so there's things that I'm structuring for my portfolio that, man, I'm extremely happy. The process of what I talked about in the last stream, I've taken action on, and the positioning is very nice. Because I do have equities as well now, but even within crypto, the rotation is looking pretty good. And so, yeah, I have some on-chain data for y'all. And same thing, it's going to help us hone in on the major pivots that I think, and like I said, like I'm willing to share this information in much more detail for anybody who wants it. All you got to do, hit me up, Telegram, swerve.the-dip. Easy to do, and we can set a time aside to do that. But I'll give you guys a little bit of that here before we take off. And so, how are y'all feeling? So we did the data check. How are you guys feeling? I know how I feel. There's really no problems. If you really take a look, everything is generally okay. Now we'll see if that changes, but as of today, everything is in a nice transitional period. And we did a whole talk on the Ethereum chart on timelines in the duration on how this stuff is going to go. So if you need more info on that, check, I believe that's 2 or 3 streams ago. Cool. And we're feeling good. That's if you're working, if you have dismissible income, start there and use your dismissible income to outpace inflation. That's all the name of the game is. And we're just finding the best horses in this race. And so don't let short-term price charts fool you on products and things that work. Let's see what we got. I think CPI results will give an expected bounce, then dump afterwards. Going to faith the news. Yeah. And so in the short term, yeah, people going to make their trades. Let them do what they're going to do. Nothing I talked about today was on a short-term time scale. As y'all know, I don't care about short-term because that never matters. But let them fade it, please, and give us more opportunity to accumulate for the longer term. And so, what we'll need to do is look at some of the derivative markets and look at some shorts and longs for, these option markets. And that's something that, do I have time? I'm going to have to get into that next stream because I want to really try to be brief on this on-chain data before we take off. But yeah. So let's jump back in. We'll take a look here on Glassnode in particular. And so what we have is the workbench. And so what I've basically done, I'm going to highlight in particular 3 major pivot. And these aren't necessarily models per se. This is just tracking things in compilation and giving us prints on when certain things are hit and detected within the on-chain metrics. So we'll go ahead because, we're talking about these transition periods. And so this is what this does with NVRV. So as we read below, we're going to go ahead and take the deterioration and correlation between the price and supply and profit. And so how do we do this during these transition times from bear to bull and from bull to bear? And so there's periods of time where there's seller exhaustion. And the remaining investor cohort become reluctant to move their funds at depressed prices. That's key. And thus the correlation between price and supply profitability deviates from 0.9 to -1. And so now with these standard deviations, we have different things that start to print. And so what are we looking for? We're looking for time periods of where we have bull tops. So bull tops where the multiple is greater than 2.4, and then bull bottoms where the RV is less than 1. That's what we're trying to do on the major pivots. And so when we have these things, we have the realized price here in orange. Then we also have the 200-day, the 2.4 standard deviation of the 200-day simple moving average. That helps us understand some detections not only for the floor but also for the top. And then so what are we taking here? We're taking the drawdown. Okay, so let's do that. And so there's a couple things that we can look at. The reason why we get these prints is because we're looking at the drawdown from the all-time highs. And so this is what's actually happening. What are people doing as they're spending their Bitcoin? They're letting it go, say, hey, I've had enough. And then so when these hit certain portions, right, like what we experienced during this bear market, what we experienced all in 2015, and then what we experienced in 2022, these major pivots, we start to get these red prints. And then when we have a whole lot of people percent of supply and profit, right? And then so we have these upper portions like this bull market here, these tops for these bull markets here, we have the blueprint. Get it? Blueprint. And then so these are the tops. And then so everything in between there is just transition. And so the closer that we find ourselves, right, even to this point here, and then so even, if we find ourselves somewhat close to 20,000 BTC, I would venture to say $25,000 BTC is still relatively close. But these transition periods of rotation of money, of where a whole bunch of people are out of profit and the drawdown is at its max pain, of which we experienced during FTX, these are things to say, hey, am I at a low risk point for the asset? That's the question you need to ask. And so the answer is, hey, if we're close to this realized price, and we are nowhere near the top of this 2.4 multiple of the 200-day moving average, which is currently at 56,000. So you have to ask yourself, which one are you closer to? Are you closer to the realized price, or are you closer to the multiple of the 200-day moving average? And we're much closer to the realized price. So what does that tell us? As an investor, that tells us, hey, we are still below fair value, because fair value is splitting the middle in between these two things. The moment that we start crossing above that fair value is when the bull market starts. And what does that mean? Is because people are happy with their gains. They're telling their friends now go buy those same assets. And then this is what gets the chart to hockey stick up. This is how these markets move. And so this is just one kind of helping us understand the major pivot. Here's another one telling us the same thing as well for market extremes. And so what am I going to be looking for on the upside? That's the key. Basically, when we start seeing this orange start to print, light orange, okay, that's when I will also know bull run is in full effect. Not just like, how's it going? I don't know. We'll see. Bull run's going to be in full effect because we're looking at the same deviations and extremes. We want to pay attention to extremes on the low side and the high side. Everything else is transition. We're in transition currently. White is transition, blue and green, bear market lows, orange and deep orange, bull market highs. And so same thing here. We're looking at trading days below, right? Trading days below 1. And that's what we're using. 1 is our basis. Anything above 1 is above average. Anything above 2.4 is extremely, extremely high prices and high risk if you're a buyer. And then so we have getting high and extremely high if we see a red print here. And then so 6% of trading days spend its time with the NVRV ratio in that period of time. This is the most extreme risk, which we are far away from. But these are the times where we want to be DCing out of the market. Extreme lows, 0.8, we are extremely low risk, 0.5. So we have a 95% chance of a great outcome if we are investing while this thing prints blue. We have an 85% good outcome if we were an investor if this thing is printing green. And so we had that. We had that for a considerable amount of time from June of 2022 to January of this year. And so the likelihood of us getting closer to this seems to be, in this downward action, a good opportunity, right? We're all about the ops, not the enemy, but the opportunity. And so, with that being said, we are getting closer to something of a similar ilk of this opportunity. So maybe it's not 85% chance of a good likely outcome, but maybe it comes to be about 80% in terms of trading days in this range. That is, do y'all see what I'm doing here? I'm taking the metric and doing the exact opposite. So if that means we spend 15% below this area, that means 85% is above. That's what I'm doing here. And so since we're getting close to that 15%, we may be, this area of where BTC price is, let's say, where are we at today? So BTC price is about 25,000 bucks. Now, what can we see here? The MV/RV ratio is at 1.2. And then so with that being said, the time of it being at 1 or below is 15%. So I'd say, yes, we are probably somewhere about maybe 18% being 1.2 of those days being below 1.2. And so that's actually a really good thing. So we're still early in the queue. More information that lets us know we're early in the queue and in that transition period. And so one thing that we have to see is the dumps start to subside, just like how we looked at Pulse and how the dumps subside. Let's look at the long-term holder balance sent to exchanges. And think about it. When long-term holders do things, because we're long-term holders. If you've been holding for more than 155 days on whatever it is that you got, you now enter the long-term holder cohort. Now, for Bitcoin, we can track what the long-term holders do with their supply of coins. And so typically when we see these large red inflections, so here, here, and what we just had in early parts of, what is that, March, we start to see a few things. And so we see major dumps and major price movement to the upside. And so we have capitulation inflow, that them saying, hey, we got to get rid of this stuff. And so this is the red here, here, but check the blue. And so the thing is, this is what is happening with the supply actually going to the DEXs. People are not rushing to the exit door like here. And this is as of currently. Current percent of long-term holders supply to exchange, 0.004%. This is 0.04% of what we experienced here, but we still didn't get a crazy dump like we did here for this bear market low and here for this bear market downtrend. And so what does this also tell us? This is a positive elation of inflow. Basically saying, oh, we sustained ourselves with this market, or I guess you can say these long-term holders starting to influx capital into exchanges, influx their Bitcoin, potentially saying, hey, I might want to take some profit. And it's not a crazy market dump because they stopped. We have somewhat of an equilibrium, and all of basically what has happened over the last couple months is just their distribution. People from China and Japan saying, hey, we invested here. We're going to go ahead and take some of those profits and distribute our coins, sell off some, reaccumulate down lower to continue the trend higher. That's what that's telling me. And last one, we're taking a whole bunch of other things, taking the extremes on the all those in conjunction. We see the Prince Blue, hey, time to take some action. Prince Orange, time to take some action. These are the top ends of the bull run. Everything else in between there is riff, raft. The closer that we find ourselves to these lows, the lower the risk. The higher that we find ourselves to these highs, the higher the risk if you are an investor. The higher that we get to these bull market conditions, the more you probably want to consider taking some profits. And we have months to do that. Not days, but months. That's the thesis of this stream. Concise, data driven, very easy to understand, truthfully. Everything else is riffraff. And with that being said, if you got the bear market lows, you have, guess what? The best part about it is you have infinite profit, because once we hit these bear market lows, each cycle, we never hit them ever again. That's what makes me happy this morning. And that's what I know I took advantage of, especially on Ethereum. That's what we're taking advantage of, potentially on PulseX and PulseChain. This stuff is a good day today. CPI coming out lower than expectations. And so let's go back over to the NASDAQ. And let's actually put a daily chart on for the first time today. And the NASDAQ is inching higher on the day. This is beautiful, because everything that we've spoken about on this channel over the past 6 months. Man. Hey, man, when you know what's up, you can take advantage. And so that's what I'm all about, trying to teach people and not tell you guys what to do. I'm not trying to give you guys a game plan on how to execute your daily operations. I'm giving you guys general aspects on how things work on a grand scheme. So yeah, we have a nice green candle for the day. Let's take this Bollinger Band off. What we can do for the short term, if we do want to take a look at this, is just pop up the 200-day moving average. So let's get up the 200-day. Boom. 200. 200. Boom. Hey, what does this say? Risk on, risk off. Easy to see. Risk off, bouncing below it. Risk off, risk off. Risk on. Break, support, boom. Simple. And so risk on periods tend to last for how long? A considerable amount of time, and we can just go back for years and years and years. We'll take Bitcoin off for now. But risk on, once we eclipse the risk on, we tend to stay there for some time. And we'll see. Oh, that's a horrible circle. We'll see if we continue to do exactly that. Like, I mean, I'm not even counting COVID, because that was all of a couple of weeks when we were below that. But y'all get the gist. Once we go back above the 200-day for the NASDAQ, that's risk on. Now, with that being said, crypto's lagging behind, so it ain't gonna lag behind forever. That's opportunity zone. And mainly it's because the United States is participating with very, 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 very little bit of money. Because they've got everybody in the US scared as heck to invest in crypto. But that's not always going to be the case, right? Presidential elections and all that campaign stuff starts next year. And so you already know what the game is. If you don't, well, you'll figure it out. But that's the stream for today. A lot of good info, y'all. I'm hoping that y'all are just, soaking it in, taking the opportunities if they are in front of you, whatever you see as an opportunity. And yeah, man, just staying around. Like, that's the key. Stick around, not just for a month or two, stick around for a year or two, stick around for 10 years to 20 years, and you'll outpace everybody else, 99% of people, as long as you participate in the right stuff. And so that's what we're on the hunt for on a weekly, monthly basis, and just trying to add to our position. during the times where it makes sense to do that. So appreciate y'all for coming through, man. I think that's it for me. If y'all have any questions, you know how to get access, and we can go from there. So until next time, I hope y'all enjoy this stream, and we'll catch you. Peace.